Okay, welcome to Crypto Kinfolk charting class. We are going to be going over the RSI, which is the Relative Strength Index, the MACD or MACD, the Moving Average Convergence Divergence, and if we can get around to it, some moving averages, which I will go over if we do. So first and foremost, when you get into TradingView, you want to find the asset that you are trying to chart. And by doing so, you come up here to the top left corner of the screen and search the symbol. You're going to be looking for the ticker. You can also spell it out. So for instance, we're going to be doing BLX, which is Brave New Coin. It is a average price action across all exchanges put together on one chart. So it should be the most accurate price of Bitcoin overall. Do not use this to trade off from on any exchange while you're doing it. The ticker on it is BLX. So click on BLX. I highly suggest that you put this on your favorites. So to do so, you come over here to the watch list, you click on add symbol, and then you do the exact same process that we just did by clicking on BLX, and you press the plus button right here. It's already added on mine, but there would be a plus button right here, and then you can click on go to symbol and it will bring up your chart. Come back over and click on the watch list and details again to make it go away, and you have your chart. So the first thing that we're going to be going over is the RSI. It is a very, very good indicator that you can use, and all of the information on it is already on TradingView. We're going to be going over the simple indicators that you can use prior to getting into the more difficult ones and less used ones. This is probably one of the most widely used indicators across the trading markets, both in all indices, stocks, bonds, everything, cryptocurrency. It's a very, very good indicator. So to get this indicator on your chart, you're going to come up to the FX button up here, Indicators and Strategies. Give it a click and come over here and type in RSI. RSI is the ticker for Relative Strength Index. As you can see, Relative Strength Index is on here. You're going to click on this to add it to your chart. As you see, it just showed up down here. I'll show you a couple tips and tricks with it right away, and then we'll get back to it and give over an explanation of it. So get it set up nice and pretty in here. We're on the weekly time frame on BLX. BLX doesn't allow you to do hourly, minutes, or seconds on here. So you do days, weeks, months, years if you want to. So one of the things that I do is I change the settings on it. You can do that two different ways. You can click on this little settings wheel right here. I always rock a yellow and sometimes purple in the background, but make it more definitive. This is one of the things you want to look at a lot. So put it on there, make it look pretty, however you want it. And do whatever colors you want. So you want to keep the upper band at 70, lower band at 30. I'll explain that here in a moment. Don't worry about the precision on that. We're not going to get into that, and you will rarely use it unless you become a master of trading. So the length, indicator time frame, you can change the time frame on the indicator. What this means basically is that you can have it on the weekly, but be looking at the daily time frame on the indicator if you wanted to, or the hourly, or whatever it may be. So now that we've got it set up, we're going to go over an explanation from it, which the majority of the things that we use in here are the simple ones that you're going to go over in this class, and you will be able to look up here. So if you ever forget this information, just come over to the RSI, make sure that it's under the built-ins category. This is an RSI that TradingView made, and they gave you the history on it. So as you can see over here, here's the definition of it. The Relative Strength Index is a well-versed momentum-based oscillator, which is used to measure the speed or velocity as well as the change, the magnitude of the direction of price movements, or the directional of price movements. Essentially, the RSI wind graph provides a visual mean to monitor both the current as well as the historical strength and weaknesses of a particular market. The strength or weakness is based on the closing price over the duration of the specified trading period, creating a reliable metric of the price and the momentum changes. Given the popularity of cash-settled instruments, stock indices, and leverage financial products, the entire field of derivatives, RSI has proven to be a viable indicator for price movements. And it goes on to show it on a chart. And we won't go over the history of it in this class or the calculation. You guys can go through this stuff and look at it. I've found that it does make sense for you to look this stuff up, to do a little bit of extra detailed research in it. I don't think that necessarily it applies to your being able to trade. So if you want to learn more about this, you can. This will bring you to the point that you will be able to set different settings on here and understand the dynamics of why you do, when you do, how you do, and how those things are applied. Personally, I don't do that. Maybe it makes me a better trader. When I tried to do it, it didn't pan out as well as some of these traders actually, stated it. So the basics, as previously mentioned, the RSI is a momentum-based oscillator. So oscillators is a big word for you guys to know. Like the majority, there's different categories of indicators. There's oscillators, and I guess we'll go over the other ones here shortly. But what this means is that an oscillator, the indicator operates within a band or sets a range of numbers or parameters. Specifically, the RSI operates between a scale of 0 and 100. The closer the RSI is to 0, the weaker the momentum is for price movements. The opposite is also true. An RSI closer to 100 indicates a period of stronger momentum. So with that being said, when the price gets down here, it's weak, and they consider it oversold or overbought, but this is oversold. So people are overselling something. The price is going to go down and stay in this area. We'll get to the point of how to use this as a reversal trend. Like if you see a reversal coming in the trend, it generally shows up on the RSI. Sometimes it does, sometimes it doesn't. But these are the price areas that you want to look for when you are looking at the RSI in total. Let me get back to here and show you. So the points that they were making, you'll see these numbers over here. It goes from 0 to 100. So 0 down here and 100 at the top. Closer it gets to it, closer you're likely to have a change. As you can see, the last bull run that we had, we stayed above this price point, or this RSI point right here. And you can also chart the RSI too, like keep that in mind. There's trends that happen on here. There is, support lines that happen. So if you can't find something on this, you can find something on here, or vice versa. But I would suggest you guys to have this 51% right here. That is a very, 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 very important number for all of crypto. If you look back, all of these bull runs, as BLX, charts the whole time and price action of Bitcoin from all the way back to 2010. If you look, every single one of these bull runs, this area of price is absolutely a very big area. And I don't know if I mentioned this to you guys before, but this point right here, this area is actually what I think may kind of play out here. We didn't have the blow off top like we did on this one, but the structure of everything, where it pulled back to, it was the only time that we pulled down below this RSI. We are down a little bit further now, but you have to think there's more money in the market. And this specifically, the more money in the market is going to drive these indicators higher or lower than what they previously did in the past. the reason why we bring up things and look at the past is because a lot of market structures will continuously happen in the future. When we go over these things, you'll notice that you can look up things in the past and actually put them directly on top of your chart, and they could play out again. Those are called fractals. We'll get into that eventually. So back to our lovely RSI indicator. If you guys want to come up with a funnier name to call it, I would greatly appreciate the humor. Serious stuff we're talking about trading, right? So getting into what to look for in this, it's you want to look for overbought and oversold regions. Once you break above the 30 and the 70, or break above the 70 and below the 30, those are the price points that you want to watch on there. I'll read this for you so you guys can understand. So Wilder is the guy who created this. You can read that up here. J. Wallace Wilder, great trader. I'm pretty sure he has a couple books. I read like partial of one of them, just a section of it. So Wilder believes that when prices rose very rapidly and therefore momentum was high enough that the underlying financial instrument commodity would have to eventually be considered overbought and a selling opportunity was possibly at hand. Likewise, when prices dropped rapidly, therefore movement was low enough, the financial instrument would at some point be considered oversold, presenting a possible buying opportunity. There are set number ranges within the RSI Wilder considered useful and noteworthy in this regard. According to Wilder, any number above 70 should be considered overbought, and any number below 30 should be considered oversold. An RSI between 30 and 70 was to be considered neutral, and the RSI around 50 signified no trend at all, which is kind of true and not true in crypto. You want to watch different numbers on here. So very high point of probability is around 53. So 53 to 54 region is when you start looking bullish. And you'll notice that on a lot of these charts that you will find pullbacks to around 53. So you put a line there just to get an idea. And this is just a visual point of reference for you guys to look at. So just put it at 53 and 43. So once you guys have those on there, this is bullish and bearish territory. So once this crosses over this point, and we're probably going to bounce from here realistically. I mean, I think that this is the turnaround point, or we have a quick wick down, and it would be crazy to think that, but you gotta understand that there's a lot of manipulation in this game right now, and we got to make sure that we don't get eaten up by it. But this is the most telling chart that you'll see. You should always watch this to find out what's actually going on in this market, the BLX, but you should always be watching your exchange that you are trading at. So pull this back up here. So the main way that I use to trade this is divergences. I mean, you guys should too. It's very important that you understand the divergence of it. These are the two most important things that you should know about the RSI period. 70 and 30, which is overbought and oversold, and then 43 and 53, which is bullish and bearish territories. 43 being bearish. Once it breaks that area, we're probably going down. Once we break 53, we're probably going up. So most likely, the probability of it is better. So divergence is, the RSI divergence occurs when there is difference between what the price action is indicating and what the RSI is indicating. These differences can be interpreted as an impending reversal. So the trend reversals that we're looking for. That's the main thing that you want to watch the RSI diverging from. There's divergence on a lot of these charts. There can even be divergence in price action when you guys are looking at it. Specifically, there are two types of divergences, bearish and bullish. The bullish RSI divergence is when the price makes a new low, but the RSI makes a higher low. The bearish RSI divergence is when the price makes a new high, but the RSI makes a lower low. So let's go to the chart and find where this played out a few times. So this is the weekly chart on here. And what we're looking for is pullbacks, things that happen that that there were lower highs on the RSI, or so for a bullish trend reversal, we are going to be looking for, which there's one right here. This is a lower high on the RSI, but a higher high on the price action. So how you set this up, you draw a line from here to here. Some of these, so there's also another one which this doesn't teach you about. It's called hidden divergence. And I'll get into that in a second, but it's pretty much the same thing. It's just really hard to see. So it could be, so like this right here, this is hidden divergence. When you have the same price points that meet on the RSI, they both came up and hit this point, but the price action was different. That is hidden divergence. I don't think TradingView explains that in here. So once it comes up to this point, you're seeing new higher price action. So you have a drawing, you take your line from the price action of where that started, that's the top of that move, and the price action that came up to here. The divergence is the higher high on the price action, so the price action went up higher, and then we had a dip on the RSI when this came down, and it came back up. It basically ran out of strength to keep moving upward. So we need a push above this. But I want to let you guys know that when this happens, you do not want to trade based off this idea until there's a clear turnaround. 1 to 3 candles after it hits a price point. And generally you want to be looking at this stuff like you don't want to trade with just this indicator at all. You don't want to trade with just the RSI where you're sitting here and you're looking at this, you're like, okay, well, we had, boom, this came up again. So here's the price point here. You know, we had a higher high on this one, but, you know, nothing happened like I could break this down on a smaller scale and kind of show you, but this one's lower and that goes higher. There's a sense of divergence, but I can't really find one right now. I'll try and find one in a little bit. But the two main things you want to look for is the hidden divergences, which happens, you know, from a bearish standpoint when the RSI is over the 50% territory, but in crypto, again, it's 53. So once we get up to a top, and you mainly want to be looking for divergences in the areas of 30 and below for a bullish divergence. That means when a bullish divergence happens, the price is going to go up. When a bearish divergence happens, the price is going to go down. So that's exactly what happened on this weekly time frame. And the higher the time frame is, the more likely the divergence is to happen. So we have the RSI that comes up here, the price action hits this point. We have the price action on Bitcoin going up to about 9,000, and then the price action shoots up more, which right when this divergence happens, I would say on the weekly chart, you could probably call this divergence when you have the long wick happen here. So this happens, but it's not totally confirmed until we have the lower high on this weekly happen right here. So then it goes up again and tries to push, which is not divergence again because it doesn't go higher, but it goes higher than this week and it just does more divergence, right? Higher high, right here. If I looked at this on the daily, it would show it a little bit better, but higher high, lower high, divergence. So there's bullish divergence or bearish divergence, which if you caught this trade and you put that in, it would have been right there. I mean, you could have rode this down and depending on your leverage, had 69% come through. So there's no bullish divergence on this, but you could do this. Once you start seeing structure on the RSI too, so you have some points that you can look at, right? So here's some structure on that. And you want to make sure it doesn't reverse from that area. And what I mean by that is if you have the price action on the RSI come down and touch 2 points, you can draw a trend line right there and then watch for the third time that it touches it. When it touches it the third time, it's confirmed if it makes it support or resistance if it's coming up to it. So if we have it come up to it, then it's resistance. We have it come down to it, it's support, and it bounces off of it, confirming it as support. So when it breaks through, that's a bigger deal. And you can see that on the price action, which all of these things, once you learn everything, have confluence. And that's what you want to find out. So this technically looks like a bullish pennant, which you could say, okay, well, this looks like a bullish pennant. Let's say all of that price action is not there. And we're looking at it and we're like, okay, well, this is a bullish pennant. It should go up. So here's my measured move. We're looking at it. It's at this week right here. We're expecting it to go up, right? And just because this RSI diverged right here doesn't mean that it's completed or anything. We just know that it's going down from here. Okay, so from this area, it's going down. It could go down 1, 2 candles, 3 candles, 10 candles, all of that stuff. Usually on the weekly, it offsets a trend going the other way. Once we have this structure actually built in here, we have this line on here. We have our two trends, the resistance trend and the support trend line that we have on this weekly chart. And if you guys want to be really safe in trading, stay on the weekly. It's definitely one of the strongest charts that you can have, and you don't have to stare at your computer all the time. So we have this point where we're expecting this to go up. It's a very bullish pattern. We're looking at it, but guess what? Bullish patterns break down too. This is an indicator that you could write down as bearish. So on your chart that I'm going to get out to you guys, like the piece of paper that I use to be able to mark things down. The reason why I haven't sent it out yet is because I don't think you guys are to the point where you guys can actually start writing this down, be calling these out appropriately. There's just, too many things that you guys need to know to be able to know more bearish and bullish cases on stuff. But I'll put it together so you guys can start using it and kind of understand, the premise of where you're going to be in the future. So as I said, if you get in really tight on these things, and if we made our price point from these two right here, the first pullback that we had, we take a line, we draw from there to there, and then we extend it out. And you can pretty much call the top of the breakout when it comes back up. So essentially, this bullish pennant actually turned into a symmetrical triangle. And it's just a symmetrical triangle. And that's what calls that price point out. Looks like a bullish pennant, could have been a bullish pennant, but a structure is not confirmed until it breaks out. So we don't know what this is, right? You can set your whole trade up on this and then be completely wrong. Hopefully you'd set your stop loss right here anyways. But if you wait for the breakout and the retest, that's the entry point. That is the safest entry point right there. And then you make that much money. The move on this, I know we're learning about RSI and MACD right now, but while we're doing this, I'm going to show you how to use them. Actually, I made that a little bit short. Wow. We could have called out COVID. Look at that. Actually, I think the first one did the body. Oh, that. Got the whole body. And wow, look at that. We could have called COVID. A year ahead. October. 6, 7 months, maybe 8 months. Look at that. That just blows my mind. We could have called out the price action from COVID. Like I said, you know what's going to happen prior to it happening. That's a dramatic price drop right there. So sometimes in class when I notice things like this, you'll see my voice just change, and it's because I'm kicking myself in the tush right now for not noticing that. But the more you look at charts, the more you will notice things like this. And once you learn the stuff that we're teaching right now, you are going to know it very well, and it will just start coming. So let's get back to the RSI here. So as they explain on here, here's the divergence. So they say some traders believe that Wilder's overbought and oversold range are too wide and choose to alter those ranges. For example, some might consider any number above 80 as oversold and anything below 20 as oversold. This is entirely at the trader's discretion. Hence the 53 and 43, that's my opinion. So I really think that it's true. After I realized it, I've seen a lot of other traders that I respect eventually bring it up. So I know that it's something that other people are looking at too. And if somebody's a good trader and you follow those little key tips from them, I mean, realistically, that's what you're getting different from me in my class compared to other people, is the things that I've seen while trading. Because again, I will say these things are not taught in any class at all. So let's go over failure swings here. Failure swings are another occurrence which Wilder believed increased the likelihood of the price reversal. One thing to keep in mind about failure swings is that they are completely independent of price and rely solely on the RSI. So failure swings consist of 4 steps and are considered to be either bullish buying opportunity or bearish selling opportunity. Please write these things down. These are steps that happen during bullish failure swings and bearish failure swings. So the first one, the bullish failure swing, is the RSI drops below 30, considered oversold. The RSI bounces back above 30. The RSI pulls back but remains above 30, remains oversold. The RSI breaks out above its previous high. So as you can see on this, that's exactly what it explained is, and it's the opposite for the bearish swing. The RSI, or step 1, the RSI needs to raise above the 70 and be considered overbought. Step 2, the RSI drops below 70 and becomes in a normal price range. Step 3, the RSI rises slightly but remains below 70, which remains to be below overbought. Step 4, the RSI drops lower and lower than its previous low. So that's exactly what it's explaining right here, but on the bearish failure. So it came up, and this is why this price right here, the 70% mark on the RSI, is very important, because it's considered the overbought zone. But often when it's in that overbuy territory, a perfect example is on this previous bull run right here. that we had in 2017, the RSI dropped below the oversold region, came back up, dropped below the oversold region, came back up, dropped below the oversold region, came back up. And you see the price action, it never changed direction. The trend kept consistently going up, going up, going up, going up. Although the oversold region was broke every single time, generally indicating sometimes a trend reversal. So I would expect that maybe for the top of the next bull run, I think that looking for a hidden bullish divergence or hidden bearish divergence might call the top. So it just goes in to explain a little bit more about Cardwell's trend confirmation. So of course, no indicator is a magic bullet, and almost nothing can be taken simply by face value. Andrew Cardwell, who was mentioned earlier, was one of those students who took Wilder's RSI interpretations and built upon them. Cardwell's work with the RSI led to the RSI being a great tool, not just for anticipating reversals, but also for confirming trends. So to use this to confirm trends, let's say Cardwell made keen observations while studying Wilder's ideas of divergence. Cardwell believed that bullish divergence only occurred in a bearish trend. Basically what he's explaining is when you have bullish divergence, it's not showing bullish divergence on here though. This is bearish. I'll get you a better example later, but bearish divergence only occurs in a bullish trend, which this is what he's explaining. So when these things happen, they're not necessarily going to completely change the trend. They often happen a lot while the trend is happening. So if we have bullish price action, you're going to see pullbacks, during the bullish price action. So boom, it drops back down. This is the dip. So you can see the dip happening, but don't get caught in a dip when the dip comes down and it actually turns into a reversal, because often you will see a reversal based on this happening here. I would say that the highest price point, like the highest mark on the RSI, something getting up to like the 80 or 90 zone, if you see bullish divergence up there or bearish divergence up there, or bullish divergence down in like the 20 or the 10 zone, that's a guarantee that it's going to reverse at that point. So the divergence points at 80 to 90 and 10 to 20, or even higher, like 10 to 0, 20 to 0, and 80 to 100 are strong. The stronger it is, closer to the 100 and the 0 point, whether it be a bullish or a bearish divergence, generally indicates a price reversal and not a continuation of the trend. So the trend being broken would be a big thing like that. And because we haven't discussed trend yet, trend is just simply price going in one direction and not turning around. I know that sounds simple, but basically a trend line, right? So that's how you tell if something goes bearish or bullish. A perfect example is our COVID drop right here until right now. So if we break that line right there, we could potentially be going down. It would be bearish, in my opinion, that we break this point. Oh, we're starting to go up now. I think somebody might have been wrong about the price action that they were talking about. We're in a bullish trend right now. That's why I don't think we're going to break this line, guys. I think it's going to be really tough for us to break down this line right here, because if we do, it would indicate that we are going to go down. That's a break of the trend. Something that happens every bull run. A trend line is followed, and then we lift off from it. So be prepared for bearish. Plan for what's more likely to happen. So let's get back to the RSI. All right, we'll just get into the summary. We'll talk about the reversals and continuations here. So as I explain, these things happen on here, and then what this means is that essentially divergence should be used as a way to confirm trends and not necessarily to anticipate reversals. However, they definitely will show a reversal happening as well. So you can, and I would disagree with this somewhat. It definitely will, confirm a trend, but it definitely shows a reversal, but it doesn't have to happen every time a reversal happens. But once you mix all this stuff together, trends, RSI, MACD, once you start getting convergence on all of these things, reversals are really easy to tell. But they sometimes are a fake reversal, but you can definitely plan for that a lot easier, have your stop losses a lot tighter. We will get into those things too. So reversals, Cardwell also discovered what are referred to as positive and negative reversals. Positive and negative reversals are basically the opposite of divergence. Positive reversals occur when price makes a higher low while the RSI makes a lower low. Price proceeds to rise. Positive reversals only occur in bullish trends. Negative reversals occur when the price makes a lower high while the RSI makes a higher high. Price proceeds to fall. Negative reversals only occur in bullish trends. Positive and negative reversals can be boiled down to cases where price outperforms momentum. And because positive and negative reversals only occur in their specific trends, specified trends, they can be used as yet another tool from trend confirmation. I need to get glasses. I'm like trying to read this and leaning back in my chair so my neck doesn't hurt as bad. It shows often on here that you will see something like this happen where you'll see the price drop in a big, so this would almost be considered a reversal depending on what time you're trading it on. If you're trading it on the 15-minute, a $2 drop on Revlon, almost a $3 drop on Revlon from $16, that's 1/8 of the price. So that's the reversal. But then, the momentum that changes it pumps it back up when the divergence happens on the RSI here. So you guys can go over this like I showed you. There's a couple more things that you want to look at, the key points on here. I think that it's important that you guys come in here and for you learn this divergence part. I want you guys to go and find a chart so your homework for this class, which I think I'm going to do the MACD after this as well. It's a long video and Justin has to edit these, but I will go over that as well. But your homework will be to find divergence on the RSI. Don't use my example either that I'm about to give you here. I want you to find divergence on the RSI that indicated a turnaround in the price that also was a continuation of the trend. So what I mean by that is right here. So we have this price action right here comes down, it creates a low, it comes up, and then when it comes back down right here, it creates a higher low, but a lower low on the RSI, which indicated that it was going up. So I want you guys to find a trend or a pattern that the RSI indicated that it was going to break out of that pattern. So on the chart, you can see you have you can call this a pennant, you can call this a symmetrical triangle, symmetrical wedge, call it what you may, but what really matters, what it turns out to be, is how high it breaks up. So to find out what kind of a trend this is, well, it's the symmetrical triangle. So that's essentially what I want you guys to do, is find a pattern, send me a screenshot of it, or send me a message or whatever, however you want to send it to me. Maybe send it to me in a message in the Patreon. I want people to start using that, because it would be really easy for me to contact you guys on and use it as an app, and then turn your notifications on your app, so I can contact you guys with important information, such as an emergency Zoom call or something, so you guys can know about your assets changing when they do, if I see something in the chart. So that's more like it. Even though the price action doesn't come up here on this one, that is the measured low on it. Look at that. Boom. So sometimes you'll miss that, because you'll be doing the price action from like there to there or something, but realistically you want to do it from the breakthrough of the pattern. But what I want you guys to do is make a pattern like this. I want you to find it, and then I want you to find divergence in that pattern. So we had higher low right here. So this comes down and makes a low, and then we have a low on the RSI, and then the price action comes down again to this point right here, and you have, this one's semi-hidden, not really though. Your higher high on the price action, but your lower high on the RSI. And that's what I want you guys to send me before next week. I'll probably put together the MACD video, and maybe Justin and I will create a module for it or something. I'm going to start having like quizzes after these, if I can get them together. Just got to have other people putting this stuff together with us, so you guys can see it a little bit better. But we will go over these things during the week. I'll start bringing things up to you guys to, like, if I see something happening, I'll ask you if you think it's RSI, and just keep quizzing you guys on it. And I just want to make sure that we have some participation as far as that goes on, in the chat that we're having. So, because repetition is key, right? The more you guys do this stuff, the better you guys are going to become at it. So that's the case. That's what we need to see. Thank you for participating in this and staying the whole time as well.